Welcome back to the What You More podcast. I'm your host, Quinton Harris. You're dialed into the latest episode of What You're One More, and I'm joined today by a reoccurring guest. Been here once, set the show on fire when he was here. We were welcoming him back for a second round. Took a minute to get him back in here, but welcome back to the show, Eric Ross.
Let's party.
Let's do it. So if you don't know, Eric is he is in the health insurance field, but more importantly, has an amazing podcast. So he's quite the personality, as you'll see on this show. But he's got a podcast called What the Health. And
What the Health just happened.
What the Health?
You got to add just happened because there's a movie out there.
Did that just happen? Is that what it was?
It's always been that.
Okay, man.
It's confusing because there's a movie and a documentary called What the Health.
So I thought it was always What the Health, but excuse me, What the Health just happened.
You should be sorry.
Here's what we know. Here's what we know. You have done a great job with, is it healthy or not healthy? Right? It's a game we will probably play at the end of this show here. And last time you put me on the spot, I was not aware of it. This time I'm armed and ready.
You're ready.
Yeah. So let's kick it off. So how's everything been going, man? Jamming on the podcast, obviously doing a lot of things. Got some great guests. Just crossed your 100th episode. Congratulations. I had Mr. Patrick Young on the show. That was awesome. Got a chance to listen to that. Pat's a great guy. Even though he didn't choose my Volunteers in the Final Four. He put every other SEC team and then dogged my guys. Patrick, if you're listening, I won't forget you for this one.
I didn't pick Tennessee either in my Final Four.
That's all right.
My son did.
We'll see. We'll see. So how's everything going on the show? How's everything going in life?
Man, everything is more good than bad, I like to say, right? So the company, 212 Benefits, we do employee benefits for small to medium-sized companies. Employee benefits, complicated, expensive, pain in the butt, similar to the mortgage industry. There's constantly changes. What works for one person does not work for another. We started the show, What the Health Just Happened. What's crazy, we're on year 3, and we had talked about this. It really takes 18 months to 2 years to figure out your cadence, what's going on. But we're celebrating 100 episodes May 5th, so we just had our 100th episode with Patrick Young. You mentioned show's been a blast. Love doing it. Personally, kids are great. We're on spring break. I did have a freak injury Tuesday night. I'm walking around on crutches, not healthy, gimping around. So my only complaint is that I'm 42 and not 21 anymore.
Yeah.
But man, I'm rocking and rolling, dude.
That's
great
great
to be back.
Great to have you here. So let's talk. Obviously, a lot's changed. We got a new administration. You obviously know we're a financially focused show here. Our audience feeds off of the information that's that kind of we go through the headlines, we cut it up. And we're like, hey, here's facts. We use a lot of facts over fear on the show. Really try to establish empowerment of our audience to say, hey, listen, it's the propaganda that's out there to kind of influence you. Whether it's socials, whether it's news media outlets, like we just want to give you some facts of what we know is happening behind the scenes and just basic data sets that help kind of say, hey, that might not be 100% accurate or maybe kind of twisted a little bit. So in the medical world, like from this administration and the change that's happening, I know what's happening on the mortgage side, but what changes are you seeing right now, whether it's in healthcare, insurance, I know insurance benefits is a huge deal. That's one of the major costs to every household. I mean, we talk about homeowners insurance, we talk about taxes, we talk about mortgage payments and just living life in general. But the cost of health insurance continues to go up too, and it's always pushed down to the consumer. So what are you seeing on this side as far as everyday and benefits? You
talk numbers. I love these loaded questions because there's so many different directions to go. So do you know what an average household family premium costs?
I'm going to guess $1,700.
About $20,000 in the United States. So if you have a family, right, husband, wife.
But $1,700 a month, so it's kind of close.
That's kind of close. A great answer.
Kind of close.
$20,000 a year is what a family's paying for their premium. So before they do anything, I am paying $20,000 to get this shiny insurance card that sits in my wallet. That's before you step foot in a doctor's office, before you get x-rays on an ankle.
Right.
That's what you're right off the rip.
And that most of those are probably going to be high deductible plans?
Correct.
Because that's what you have to pay to get affordable at 20.
And they're what are they doing? They're passing on those dollars to the consumer, which is so backwards. An individual, right? So just if you're one person, not dependents, being fortunate here is $7,000 a year.
Yeah.
That's a lot of money.
For an individual,
so a
single
family,
person.
What's the average, the median income for the United States right now? Do you know?
I think it's like maybe for a household.
Yeah.
I think, Charlie, we did this on the show. Wasn't it like household median income in the United States? I know it was in Jacksonville, but I think it's 138 for the household. But here in Jacksonville, it's 78.
I was going to say, I think nationwide, last I looked, was $72,000 for a household. Okay, let's bump that up to $100K. So you have a family, if they're making $100K as a household, $20,000 coming out of their pocket just for an insurance card. That's broken.
Yeah,
that's a problem.
That's a problem. So you do that quickly, that's 30% of the income going out the door.
It's a mess. The administration side, so like anything, we talk about a show, it takes time to see what's working, what's happening, right? It's been a couple months. How many big changes are happening? A lot of administration's changing. some terms. It's really complicated to talk about. This might be my business partner, Joey Jansen, could talk about this more. It's called the Consolidated Appropriations Act, so the CAA. What's happening in our world, which is great, is transparency is a necessity now. It was the Wild West in insurance and benefits where you could hide the compensation you're making, you could increase bonuses with insurance carriers. Like it was I would say borderline legal mafia.
Right.
So the CAA just came out. It's been a while now, but it's just increasing in popular. Like people understand it more, why it's relevant. That was a big change before this administration. And then I think the biggest thing, these are strictly my opinions too, right? Some of these things are. A huge focus for me personally, like who is most responsible for your costs in healthcare?
Like in our household, like who's
you personally? The dollars you're spending on healthcare, who controls that the most?
Sure. I mean, if I'm asking, like, are you asking? I guess what I'm asking is like, hey, who do we spend the most money on in insurance in our house, or who controls it?
I was gonna say, I am the most in control of my healthcare costs.
Okay.
No one else is, right?
Because you determine if you want to go to the doctor, you determine if you want to have things done.
Whether I get insurance, whether I see a doctor, where I go, am I paying cash, am I using insurance? But the biggest thing is, how do you take care of yourself so you don't need to use the healthcare system as much as possible? So this administration, again, you can call them TikTok moms. I think podcasts have really changed the world recently.
Absolutely.
The election this last time, but you have very well-known people in different sectors talking about ingredients in food. Medications, that the cost of medications, big pharmaceutical companies, what they're charging for a medication that's $2,000 more than what or 2,000% more than what the actual medication is. So the biggest thing I think that's nice, one of a few things, is this emphasis on it's MAHA, Make America Healthy Again.
Right.
That is a huge push. Is it, shiny objects? Is it actually going to happen? But at least now people are talking about it. Why are the obesity rates through the roof? Why are there so many people with multiple comorbidities? Why is the rate of diabetes skyrocketing over the last 20 years? Now people are talking about it. They see it, they understand it, whether it's with their children or adult age. So they're putting an emphasis on getting people healthy again. We'll see what happens, because you're talking about trillions and trillions of dollars in healthcare, pharmaceutical companies, the food industry. But the fact that it's being discussed, and this new administration, I'm going to talk about Dr. Marty Makary specifically here in a minute. He was appointed to run the FDA. Incredible human. That's a big thing right there. Transparency is a huge one, but I think two things. Putting an emphasis on being healthier is happening, and then transparency in the healthcare industry, because for a long time, again, these are really deep conversations.
Sure.
But I'm just trying to scratch the surface here.
Sure. So you're a fan of you like Robert Kennedy.
You can judge me, you can say what you want. I am an RFK fan. I really am.
Yeah, no, I have no judgment one side or the other. It just sounds like to me you're a fan of what he's bringing to the table.
Absolutely.
And bringing light to a topic matter that may not have gotten as much light on it before.
And bringing in scientific research. That's the other thing that there's hundreds and thousands of peer-reviewed scholarly articles that doctors, nurse practitioners, nurses did and put hours and hours behind. Using that information to make wise decisions. Because for years, this is another book by Dr. Marty Makary, he just came out with, called Blind Spots. Highly recommend getting it. Where they would take this research, find one sentence in it, and drive that sentence down basically people's throats,
right,
to say this is a good thing,
versus
like, no, that's the complete opposite of what this 10-page peer-reviewed article is about.
It's kind of what people do with the Bible too.
Correct.
Yeah. Same situation. You always find what works for you and then use it, right? Yeah. So weaponizing a study is what they did there. Correct. Right. So. Well, no, man, I think that's great. And, the other thing is Charlie just looked it up, so I will correct myself here. It's 65,000.
I thought it was about 69,000.
65,000. Now, I think if I'm correct, without looking over the screen to you, Charlie, that's from like the 2023 Census Bureau, because the 24 is not out and we're into 25 now. So we're on my statement earlier, we pull real-time income data, so we might be a little ahead of the curve. I don't know that it jumped that much.
I'd be curious to see
But
real-time.
It's definitely because we've seen during this time, just in labor wages, right? As the job market becomes more restricted, the hourly rate has gone up a little bit. Plus, we talk about it on the show all the time, more people have a part-time job subsidizing a full-time job. So the household income now is probably, it's not higher as in like, oh, look, we're winning. There's just more job functionalities taking place in the household, and we have more people holding down second jobs than ever before in the history of the United States just to survive. That tells you how bad the economy is, by the way. People aren't thriving when they have a second job. I mean, hell, most people hate their first job. It's not like they're going, oh, man, I can't wait to have a second job. They're like, I'm trying to get away from this first one as fast as I can. So it's not a good sign.
want stats? I like random healthcare stats.
Yes.
Do you know?
Hit me with
Do you know the highest rate of heart attacks during the week?
Ooh, it was Monday.
Monday morning.
Oh, I got one right, Charlie.
Monday morning. That's when more heart attacks happen. Again, is it because you're waking up, you're dreading going to work?
It is.
Not healthy.
Not healthy.
Yeah.
And it goes to that point. Like, I always laugh. I'm like, I don't laugh about we having record numbers of second jobs, but you got to remember, before this, and those numbers were kicked off back, I think we recognized that in like August of last year. That's when we started seeing the numbers rise to all. And since then, it's been a new high every month of second jobs. But the previous administration was like, we got a good economy. Like, we're thriving. And I'm like, there are so many warning signs that this economy is not good. And one of the things about this new administration is I like where Scott Bessent has come out and said, hey, listen, we've been intoxicated on maybe government spending. And we need to go to rehab, basically. We need to go to rehab. We need to stop it. And the economy is not as, the private sector is not as strong as you think it is, as you've been disguised to think it is. And he started spitting some facts that we haven't heard a Treasury Secretary. I mean, he was having real talk with the American people. And I mean, he's saying things that we talk about all the time on the show, like, hey, listen, I need to get the 10-year Treasury down. The spreads from the investors are going to get better. And I'm like, who the heck is this guy? Like, where have you been all 25 years? And it's kind of cool to see the realness that he's bringing out to the public. But to your point, I think there's a more realness to this administration than not just the last one, then I'd say the one before, the one before, the one before. So I want to make sure that I'm real clear. Whatever they're bringing to the table right now feels a lot more real and transparent.
I love that. That's it. I think the American people are tired of, can I curse on the show?
Yeah.
Are tired of bullshit and fluff.
Sure.
Like, here are the facts. And again, you're always going to adjust how you say a message, whether you're on camera or not. But I think people are like, they don't trust healthcare systems. They don't trust the government. They don't trust numbers they're being fed. And now it's like, people want transparency. They want honesty and transparency.
Good, bad, or indifferent.
Correct.
Hit me with another medical fact. I'm 1 for 1.
How about a medical acronym? We talked about this.
Ooh, buddy, this is going to be bad.
Everything in the medical industry is acronyms, right? HMO, PPO, all of it, all this stuff.
I already feel a loss coming on.
I have 2 acronyms that I'm obsessed with. One of them is FIMS, that's foot and mouth syndrome. Yep. Some of us suffer from foot and mouth syndrome. And then the other one is WAFU. I don't know if we ever talked about this.
Oh, no. So I'm going to lose this one.
Again, I love this. I think it stands for we're all fucked up.
Okay.
So I always say WAFU. Everybody has some demon, has something going on, has a problem. The ones who pretend they got it all together, that's who scares me the most. Okay. So my 2 acronyms I talk about all the time is WAFU and FIMS. But other stats, you know what the #1 cause of debt in the United States is right now?
I'm going to say, just based on what we're talking about, medical debt.
Medical debt, the #1 cause. And 65% of those people going into medical debt have health insurance. It's awful. A mess.
That's awful. That's awful. Well, you know, I'll say this, and you know, I don't live in your world, but as a patient and as an insurance, basically, I guess you would call me a subscriber. Is that what you would call me? I got people who they're my provider. Would I be the subscriber?
Yeah, that's what's backwards. You're a consumer.
I'm a consumer, right? So I noticed that, and this, when my children were born, they were 16 months apart, Irish twins, by the way.
That's crazy.
So what happens is I noticed that nothing changed in the insurance, and this was years ago. From the moment my daughter was born, 16 months later, my son was born, 80% increase for the same procedure. Nothing changed, 80% in 16 months. And that was 18 years ago. And so what's crazy about that to me is with inflation and cost of everything, that was out of pocket. I can't imagine what people just day to day deal with. And I see some of the bills come through. And by the way, I am like, just so our audience knows, like the #1 thing that can tank your credit report is a medical bill that didn't get paid because you thought your insurance company was going to pay it, so you slide it to the side, or you put it in a folder, or you trash it thinking it'll come back as a reminder because you get the EOB and they tell you what you think you're going to owe, and then you wait for the bill to come in and you're like, oh no, my EOB didn't match. That's explanation of benefits. So like,
I'm glad you know that, because a lot of people we say, do you know what your EOB is? Yes. They say, what's an EOB?
And so, but this is where I'm a credit conscious person because I live in this world. I see the effects, the cause and effect. So because of that, I'm consciously aware. And like, the only thing in my house I'm a tyrant about, and I use that word very lightly, is medical bill came in, grab it, because it's the thing that can just show up on your credit report and just blow you 100 points out of the water, and you're like, how'd that happen? And so like I get so consciously aware and trying to teach my kids, I'm like, listen, yeah, you got a cleaning. And they say it's going to cover it. The EOB says you're good. If something comes in from the doctor and it's $20, do not discount that $20. Just pay the $20. We can always talk about it later. It's $20, like or 100. Like it's what it is. Pay it and get it off the plate, because that's more detrimental, honestly, in some cases, than a late on your credit card.
I love that this topic came up. This is hysterical, because you're like, the way that your mind works, right, with money, credit scores, et cetera, in the industry you work in, it is relevant. You are an educated consumer.
I am. You originally programmed not to mess that up.
And you know more than most.
Correct. And in this case, I know that.
The majority of the population is not and don't understand.
I know.
What's funny is I'll make a counterpoint to what you say. And again, I love mentioning specific books that I think everyone should read this if you want to understand how healthcare works. They're pretty simple reads. So Marshall Allen, this man passed away last year, an absolute legend. This book's called Never Pay the First Bill.
Okay.
So what happens in your example, if you get that bill in the mail, your thing is pay that immediately. Mm-hmm. I will argue the opposite. Never pay the first bill, because 75% of medical bills that hit your inbox and what you owe, everyone just pays it. Everyone just pays it. You could be double billed for the same thing. So you can delay. I get like you don't want to affect the credit score, but this book talks specifically in that instance. If you get a medical bill, don't pay it. Ask questions. Understand your EOB. You can negotiate price. Oftentimes you call and ask 4 or 5 questions. They'll say, never mind, we're going to waive your bill. This book, for any consumer of healthcare, I'm telling you, will cannot recommend
change the way you do it. And so maybe I'm not as smart than the average person.
Marshall Allen.
Yeah, but I think that because of the world I live in, I'm so programmed to do it. And the other challenge is this: for me, the thing about insurance and the thing about medical providers, they make it painful for you to make that call. And the pain is driven by, I'm going to run you around. I'm probably not going to answer the phone right away. And then I'm going to transfer you to someone else. And then at that time, like I look at like cost of doing business and just cost in general. Like it's
opportunity cost, time spent.
For me, like I don't have 30 minutes of a day to just fight that and be done. But I will say that I understand the principle on that. And for me, it's just embedded in my head. Don't mess up the credit by seeing that happen. So maybe I am jumping the gun and wasting some dollars there, but I do understand what you're saying. And I will say that, case in point, there's a very popular hospital that's here. There's only 3 of them in the United States. And, I have been there for emergencies with my son before, and I have seen some things come over that I have been like, wow, that was way more than I thought it was going to be. And I have said, okay, I'll make a call on that. And my wife is in the medical field, so she's way more intelligent than I am on the coding and all of this stuff. And went to your point, when you've called and asked the billing department, they've been like, oh, hold on one second. Yep, you're wrong. Here's an adjusted billing. So that does happen.
Man, again, I didn't think we'd go down this rabbit hole. I love this rabbit hole. So I am gonna plug 212 Benefits.
Yeah, I'm in your world right now, by the way. So I'm tiptoeing around this because
we work with companies typically 500 employees and smaller. Our sweet spot's companies 100 employees and less. So to your point, we have a department. If you call with a medical bill and have concerns, okay, let us do a couple things on your behalf before you have to sit on hold for 3 hours for a large insurance carrier.
Sign the waiver. Let us take care of
it. Let us ask the questions and go through it, and you will be shocked at how often those costs are eliminated almost entirely or a fraction of the cost.
So let's do this real quick. So if you have a company with how many employees or less?
500 and less.
So you got a company 500 less. That means you got 10, you got 5, you got 25. It doesn't matter.
Correct.
All right. In the link on this podcast at YouTube with What's Your One More, it's going to be on YouTube with What's Your One More, the number 1. Subscribe. In the bottom, there's going to be a link to 212 Benefits on there.
Love it.
You can find this. You'll find the contact information. And if you think that your team would benefit from having a service that's going to challenge these bills, never pay the first bill, help you and your team find out exactly, what that is and isn't, then click on this and take a look at it. And it's a great service that you guys provide and an opportunity to take advantage of this with Eric and his team.
I love that plug. We talked the show, What the Hell Just Happened. So 212 funds all of it. I never talk about our business. I try when someone comes on as a guest, it's like, I want to talk about you and what you're doing. Mm-hmm. To your point, so every company, every human wants the same exact thing for insurance. And I talk about this to every company we meet with face-to-face for the first time. We know what you want. You want the best insurance possible for the lowest price possible. Everybody wants that. We want that for you too. Like we know that. That's the number 1 goal. But what are the other things outside of that? Negotiating with carriers, making decisions based off of your census. Are they healthy or not healthy? Your employees, dependents. It's all the other stuff through, let's say, 330 days of the year. So shopping the insurance is probably the easiest part, because they, how they make decisions and what they pick is based off of what's the best insurance for the lowest cost possible. It's all the other stuff that helps make decisions and drive change.
I always say this about insurance to people, whether it's car insurance, health insurance, homeowners insurance. And if you've been around me, you've heard me say it. It's like a broken cock. I say this all the time. Insurance is one of those things you never really realize what you need, and you never want it until you need it. Like you're like, I'm good. I'll take the cheaper one. And then you get like a terrible car insurance that doesn't pay out the premium and doesn't pay what you need. You're like, dang it, I wish I'd taken the more expensive one. Same thing with healthcare. If you take that cheaper route, this is a true pay for what you get type environment. And it's not always about the lowest price. And I always value service when it comes to insurance. Like, how good are you going to be to help me get things paid for? Period. Case closed. That's it. That's all I want to know. Because if I don't, otherwise, why do I have you as an insurance company at all at any capacity?
I say this all the time. Everyone does. Do you want to pay now or you want to pay later?
Sure.
Give me the crappiest, crummiest plan. Like you're going to pay later when something happens.
That's
Hopefully
right.
it doesn't. That's when I go back to taking care of yourself. What big transition that's happening, a lot of people are going to cash pay. So if you go to that large hospital system you mentioned, and you have an insurance card that says Florida Blue, I have an insurance card that says United, he has an insurance card that says Aetna, we're going to have 3 different prices.
Because of the negotiation between the insurance company and the
between them and large
relationships.
hospital. If you go to that same hospital for the same procedure, let's say it's a foot MRI. If I say, what's the cash price? It is hundreds, if not thousands of dollars less expensive than you say, here's my insurance card. Yep. It's crazy. So and that's changing.
That's the mob racketeering you're referring to. So just for our audience, so
I'm going to get in trouble for some of this stuff,
so
by
just
the way.
in trouble.
FIMS, foot and mouth syndrome.
I'm going to get him out of that. So here's really summed up what he's saying is that the major providers have pre-negotiated rates at every hospital, at every facility nationwide. And their negotiated rates are not created equally. They're created to benefit the provider and the insurer, and the cost is passed down to you, the consumer. However, if you go in with straight cash, you're going to avoid that whole brokering out of the services and eliminate the middleman. And that if you can't afford it, not everybody can, but if you can't afford it, you're going to get a cheaper bill with the same service structure that you would have gotten around the other providers.
Yes, and there's a couple things to acknowledge. So when you mention provider, here's another huge change that's happening in healthcare. Clinicians, doctors, pharmacologists, nurses, et cetera, they're burnout more than they've ever been burnout.
Yep.
There is a massive physician shortage coming to the United States, and a lot of it is due to how you have to document, how you have to code, that you got to click buttons in order to get reimbursed certain rates.
And if you don't put the certain procedures are bumped up to a different label something differently, so they do get that pay. And there's billing departments that analyze this, and they're like, hey, man.
Rev cycle management is the fastest growing department. Administrators and large. And look, I got to say this too. Like, I love all of the local hospital systems. Sure. We have a good relationship with most of the insurance carriers, and they're not, I don't want to say they're evil, right? There might be some people in there, but you talk about the ones that are touching belly buttons, patching wounds. They care. Like, they're as sick of this, as tired of this as anyone.
The people that are in the weeds, saving lives, helping people get healthy, man, they're over it. Yep. And to your point, a lot of those physicians and a lot of those general practice, what they're doing to get away from that day-to-day stuff is they're going and doing concierge services.
Oh, in hordes. So DPCs, direct primary care, concierge practices. Absolutely.
This is where they're going, but it's a better lifestyle for them. They can maintain their patients with better service, better quality care, and the rates are firmly different than what they're forced to be charged in other areas. And that patient becomes a client at that point. It's more of a client than it is a patient, so you're treating them like a client.
You talked about something too, that there's so many technologies popping up too that we use in-house, we recommend to other people. So if you have a procedure right now, you go on one of these multiple technologies, softwares, it's almost like a Google of healthcare, and say, I need a knee MRI, type in your zip code. It's going to give you everywhere you can get it in a 10-mile radius and what the most cost-effective version is. Okay. So that's the direction too, is educating consumers to make smart choices.
That's huge. So let me switch gears a little bit. So we just talked about, hey, listen, you're a company, you have 10 employees, you have 500 employees. A lot of our audience are independent contractors. They're real estate agents, they're independent contractors, maybe they're lenders, maybe they have a small business, it's just them. What do they do?
Oh man, that's tough. I think that'll change too. I kind of have a love-hate relationship with the 1099 model.
Okay.
And I think there is a possibility. Let's use...
What is it you hate about it?
I don't hate it. It's just...
Or what is the love-hate relationship?
It's more, this is just in our world. I love the model. Like,
right.
you want to
be an
provide and do well. Like, you control your own destiny. But strictly from a healthcare capacity, they have to go to the open market and shop by themselves.
Yeah.
Some people will, some people won't. Companies, one of the 3 questions when someone's applying at a job, what do they ask? how much is the compensation? What's my earning potential?
Right.
Let's not like money matters.
Right.
I don't care what anyone says. How's the company culture?
Right.
You still care about money.
And benefits.
What kind of benefits do you offer?
Exactly.
Those are the first 3 questions everyone's going to ask when job seeking. For 1099 employees, there's ways to do it. So we have some companies. There's actually a real estate product that, like a partner of ours, they're based in North Carolina. They only work with real estate agencies to help provide benefits for the 1099 employees. What does that look like? You're not giving them a salary, but maybe it's X amount of dollars that they contribute. It's called an ICRA, an individual contribution health reimbursement.
Can we put that link in here as well?
I can send you and share all this stuff.
So we're going to put that on our YouTube channel as well. What's your one more with the number one? We're going to put that in there for the agents to take a look at.
The real estate one too. Let me confirm this, because last call we had with him, I'm like, look, there's a bunch of places like this building we're sitting in.
Yeah.
How do you offer something that doesn't break the bank for the company, gives something for the employees, and makes it a little easier? Because I'll tell you what happens. And the ICRA thing specifically, individual contribution health reimbursement account. Company X, we're going to pay $300 per employee per month to go shop their own thing on the market, which is great. It covers the cost. They pick their own plan. If that employee does not go on monthly and hit submit, they're kicked off the insurance for the year till the next open enrollment. So there's great things out there, but the consumer has to be educated.
Right.
But I'll immediately, I'm going to call this guy today and be like, remind me again of this product? Because I had thought about you guys probably about a year ago. And I'm just curious in that world, especially real estate.
It's the number one need of real estate agents. It's the number, like most of them, the ones that are full-time do very well financially, but the number one need is benefits.
Or they're on the spouse's plan, which then, so wife's in real estate or husband's in real estate, they're on husband or wife's plan for that company. That skyrockets that company's plan.
Correct. But a lot of husband and wives are teams in real estate.
Yeah.
So a lot of them are working together in real estate.
I would bet most are shopping on the open market, which has its pros and cons. I would say a lot more cons than pros. But
so, like, from like a patient consumer standpoint, a lot of anger over medical, or is just acceptance? Which one is it?
I'm going to say a combination of both.
Okay.
The biggest thing is, again, consumers now, they care. You're looking at every penny that goes this way or that way. How can I spend more intelligently?
Okay.
The frustration is now, like, I need to see someone right now for this foot. Like, I'm banged up. I don't want to go to the ER, because the second you mention it, your son, when you step foot in that ER, minimum $500 to $800 when you walk in that door. Then everything after that, if you get an IV in the ER, the cost of administering an IV all in man hours should be $40 to $60. You get IV administer in the ER, $600. They're adding a zero on this procedure. Right. So it's making smart choices. It's a lot of frustration, but I think people now are way more aware and making smarter decisions.
Do you think a lot of people are frustrated with just I'm not gonna call it racketeering of the insurance industry, but like, do you think they feel like they're becoming victimized of the greed in the health insurance?
No question.
Is that what we saw happen with Brian Thompson?
I got to tread lightly talking about this.
Okay.
Because I have, I love, let's talk about stuff like that. We are at a tipping point in healthcare in the United States. And I always say, do you remember when that massive ship got caught in a canal, like it tried to turn and was stuck there? It's like trying to turn around the Titanic on a dime. Yeah. This is a huge...
You're talking about the one in Baltimore that got stuck.
Correct. Yeah. This is a huge industry that's very difficult, but the ship is turning. That, again, a lot of people really try to tip about it. It's so sad. There's nothing good about it. You have 50% of the United States that's celebrating what happened. And like, I had met that guy. Like, he was an incredible human, a great father. You're the CEO of a company that has a pretty bad reputation right now. And all these large insurance companies now are, like, again, increasing their security team, but
maybe taking notice is what you're trying to say.
Yeah. There's, I would say, a horrible situation. Personally, like, I don't love I don't care. It could be the most evil person in the world. Yeah. Like, I'm not going to celebrate something bad that happens to someone else.
By no means. I think that, and I agree with you. I think, that I had no idea that you two had met. What I was getting at was vigilante consumer anger. That's scary in the United States, and that's a problem. That's something that I think that we've seen. How can I say it? One too many times, right? And I think that our country is still very divided. It's still showing up today. Yep. I mean, a lot of the anger from opposing sides of what's going out, and this attitude of take it in your own hands. burn things, people being upset with Elon, whether you like what he's doing or not, setting Teslas on fire at the Tesla stations, doing stuff like that. Like as a society, we're at a tipping point, and at some point there's got to be something that brings us together. I'm not saying that we're not going down that path, but I'm saying there's continuing things that we're doing, and there's inflection points. And a lot of the things that are put in place by this current administration are creating inflection points that I fully understand. But I'm at a different level of understanding than maybe 50%.
Let's say eight people in this building
eight
right
people
now.
in this building may not agree with that, and that's their prerogative. But I said this on the show to Charlie. I forgot who we were talking to. It might have been just a self podcast, but I think it was Lenny Curry. Is that we've got to get back to a place to where we're allowed to have a disagreement. And I respect your point of view, and that you respect my point of view. And we don't walk out of here going, dude, I'm about to set his car on fire. This is crazy. Like, F him, this, that. How could he possibly think that? Like, we've got to get back to a point to where, and that's one thing I continue to preach to my kids, is like, the social media doesn't help because, Twitter fingers, you can do whatever you want.
Healthy.
Not healthy. But and it's not real. It's just not real. But when we have these face-to-face conversations, like, respecting the other person's opinion and just listening. It doesn't take much, just listen. And then you have a right to have your opinion, and don't be scared to have it, but don't try to be influential with it. That's the biggest thing.
We have a term. I love, again, man, you're bringing up some great stuff. We talk about this in my house, but it's, again, if it's a client we're working with, an employee at 212 Benefits, I feel like we have lost the capability to disagree agreeably.
100%.
How do we disagree agreeably? Anyone can have their thoughts and opinions. Let's sit down and talk. And at the end of the conversation, I may disagree with you, but like, that's okay.
Yeah.
And it's not good versus bad, right versus wrong. You can have separate opinions and be on two different spectrums, but how do you disagree agreeably? And I think like we've lost that.
And like, this is a good message that I guarantee if we took a reel, we put this online, right? There's going to be someone, and there's going to be people that agree. There's going to be people that disagree, right? But there's going to be someone that's got to be the funniest person in the room that's got to make a comment to try to humorize this, or excuse me, humorize. I don't know if that's a word, but make humor, make fun of the situation by poking at it, because for whatever reason, that's their insecurity showing up, and they don't know how to be in the conversation, so they just poke fun at it because it's like, oh, it's okay as long as it's humor, and it's like, yeah, I love comedy more than anybody, but like if you're degrading someone based on that humor, it's a little different situation. And so I think that that's a challenge that you have with social media, is that there's no realness behind it, right? And so I think that's a whole nother conversation we go down. But my point is, we got to get back to where we're respecting one another's opinion and quit. That's the only thing I think that bridges this divide right now, is getting back together where both sides can say, hey, listen, I understand what you're saying. You understand what I'm saying. Compromise is key. We haven't had across the aisle really since probably Reagan. You can argue maybe Bush, but it hasn't been a lot of bipartisanship in quite some time. And instead of like handling your business behind closed doors, like when mom and dad fight, they probably should do it behind closed doors, right? Because it makes the lingering effect go away. They can handle their business, walk out, no one knows. Same thing with bipartisanship. When you air that out on social media or you put a camera in front of it, that isn't going to end well.
Let me ask you, I want to pivot to social media, right? So I love doing the show, What the Hell Just Happened. I always say it's my favorite 2 hours of every week. The world we're in now, once we brought cameras in, everybody wants clips and chop up and distribute on social media, which is, I love it. It's great.
Yeah, chopped and edit.
I almost quit doing the show last year because the scheduling, the posting, and every guest is like, hey, when are you going to get it up on the podcast? When are you going to distribute the content? I get it.
Yeah.
Like we're looking to hire someone full-time to do it. That's different. I love LinkedIn. I use it for business specifically. I'm very self-deprecating on health insurance.
Or Jaguars.
I will dog them and I love them at the same time. Yeah. I cannot stand Instagram. I hate Facebook. I don't think I have a TikTok account, but that's the world we're in now. Where I think you have to be present if you want to distribute this information.
We had a TikTok. We got kicked off a couple times
for the stuff you said.
Yeah,
that's a whole different conversation too. But I look at younger kids too, depression rates, time spent on screen time. Like it's a tough thing.
Exponentially a challenge.
Yeah.
It's getting worse, right? Yeah. And the false expectation narrative, that's the biggest thing. Just the false expectations that's being set through that is just not healthy.
We talked about it too. Like I don't track engagement. If someone comments, I try to respond to it.
Yeah.
If it's a negative thing, I typically just respond with a clown emoji or a troll. Like that's.
When we talk about this, I mean, I have a canned response. in my notes on my phone. So I just cut and copy and throw it on there. Yeah. But I have found that when someone disagrees, right, or is like, hey, and I've had some things where people have flat out said, he's an idiot, he doesn't know what he's talking about. And by the way, I respect your opinion. I give you facts to show that I do. I've had a couple people go, oh, where are you getting your facts from? And I'll post the link and show them where we're getting it. And I have no problem doing that. You call me out on that, I will show you its facts over here. But when people come in hot with just an erroneous opinion that has no fact behind it, I just put in there, hey, you know what? Thanks for reaching out. Appreciate that. It's great to hear from you, and appreciate your opinion on here. What could we have done better?
Or let's talk offline.
No, just what could we have done better? And I was like, we respect our audience and we want to get better at it. I usually throw something like that in there, and it diffuses the entire situation because they usually don't respond is what I'm getting at, because to your point, it's a troll or something like that, or a bot, something of that nature. And so anyhow, but we were talking about this. You don't look at metrics. You've been doing your podcast for 2 years now, and we're over 2 years as well. And I think we were both discussing when you hit that 100th episode, or on your way to that 100th episode, it's like this monumental moment. But then you get pulled down by all these people that are like, hey, I want to talk to you about podcasts. I want to talk to you about doing this and that. And I think we were kind of cutting up, off air before we got on here, is that this is like a commitment. And it's not like a hey, wing it, let's get in here. It's a commitment. It's a thing, and you got to be regimented. You got to be consistent with it. And we were both talking. You got to fund it correctly, right? You got to treat it like a business and do it that way. And I think we were discussing that a lot of people, they ask questions like, "Oh, hey, how did you get started?
Let me pick your brain.
That's the one. Let me pick your brain. Let me pick your brain." And it's like, I love what you said. You said, well, first of all, you're not going to be Joe Rogan. You're not going to get sponsors come crawling at you. And at the end of the day, like, this is a super empty echo chamber. And I remember, like, when we released our first 5 episodes, there was one of them, Charlie, I was like, man, I'll never get
going to the moon.
Well, no, I just thought like it would pick up. And then our 25th episode, we had a huge guest. He was big, and we dropped it. And it was like, you could hear the crickets. There was maybe like 100 people that listened to it. I'm like, how did that happen? Like, this is such and such and such and such. So then fast forward a year later, on the anniversary, we always re-release that episode. Because
1 year anniversary
of that episode, we'll release it again.
That's smart. That's
and
awesome.
We do that every year with big guests, and we do it for tracking purposes. And what we found was that second year we released it had over 500,000. And it didn't have 100 the first year we released it, but it was traction and continuity. And then what we found is how the algorithms started dropping it, and then it picked up crazy. And to this day, it was our largest YouTube. It was huge. And we take key episodes, and every year on the anniversary, we drop them. And because we want to see how they reperform in the algorithms, but more importantly, how the audience feels about it. And as the audience has grown, that's what we learned, as the audience has grown, they missed it. They're not going to go back to episode 25. We're in 238.
Yep.
So we'll re-release it again on an anniversary date.
There's so many things to hit on that, right? I don't care what the job is. I'm going to use this as a comparison to radio, podcast, whatever it is, news show. When you start a job, right? When I was a firefighter, it took me 6 months till I'm like, I know what I'm doing. Then a year passed, and it's like, oh shit, now I actually know what I'm doing. Then all of a sudden 2 years goes by, you're like, oh, now I know what I'm doing.
Yeah.
So again, whether you're selling mortgages, real estate, like anything, you go for school for it, but it takes time to realize like, oh, now I know what I'm doing.
Right.
I think 2 years is the magic number. Show, job, where you really hit your stride and you start getting on fire, it's 2 years.
Yeah.
So for anyone out there, and there's a lot of shows popping up all the time.
This is the fastest growing industry.
If you are not consistent, regimented, scheduled, and understand that this is another job.
Yep.
There is a cost to it. I don't mind talking about what we spend. We spend a lot of money on this. We don't have sponsors. But if you're doing it to be famous, to make money right out of the bat, with selfish intention, you are wasting your time.
Time waster. So let's talk about this real quick, and then we'll kind of wrap up the show here. From a podcast standpoint, there's over 4 million podcasts between Spotify, YouTube, and Apple. How many do you think are not in the graveyard? Meaning that they don't record anymore, they're active, but I mean, otherwise, like, how many do you think are still actively recording? And then, or let me make it easier. How many do you think are in the graveyard? How many do you think are
dead out of 4 million?
Dead, and there's not a single episode past. The last one they recorded was 6 months ago.
I'd say 3.5 million, maybe more.
That's dead on. It's 3.1 million.
So again, it's consistency. It's like anything. It's showing up. If you want to get in good shape, you can't go to the gym one time.
It's nuts. And so here's another one. We'll hit you with some podcast trivia. what number episode do most podcasts fail at?
I think it's 3 or 4. I used to know this.
It's 7.
7.
They don't make it past
guess.
7 episodes. They don't make it past 7 episodes.
Because it's work, man.
It's
This is a project.
So do you know how many famous people have failed at podcast? I'm talking like,
Oh, yeah.
I'm talking sports superstars. You guys, I'm talking names you know by name.
Yep.
Political people you know by name. And Hollywood movie stars you know by name. Like it didn't work out for them. It's a lot.
We're going to give a shout out to someone, Fred Taylor.
Yeah.
Legend, Gator legend, Jaguar legend. So he had a show.
Freddie T.
He had a show for a while. Now he does a very successful show called The Pivot.
Okay.
His first show didn't work out for a variety of reasons. And
Okay.
he pivoted. Their show is skyrocketed. That's just a great example. Famous people, not famous people, you could be the best conversationalist in the world. But if you're not scheduling these conversations, distributing the information, and patient, it doesn't matter.
The patience is the big thing.
Yep.
So like, I'll say this, that goes with any industry, but especially this one. Like if you lay down episodes expecting feedback, then you're going to mess up. And what's funny is when you start podcasting, you'll get text messages from people. Hey, listen to that. It was awesome. And you're like, hey dude, can you put that in the show notes? Like, can you put that in the commentary of when people text me like, and now I've gotten to the point where it's just habitual. Someone's like, dude, I had someone reach out the other day and he was like, dude, I loved the segment you did at the end about burying hatchets, moving on in life, and mending fences. He's like, dude, it was the right time, right place. I was like, thank you so much. I was like, can you do me a favor? Put it in the commentary. Can you go to that episode and drop whatever platform you listen to it on, just drop that in there for me.
I know we're about to wrap it up. I want to say a couple things on that. I'm terrible at that. And I'm going to tell you our rules of the show, right? So we're excited. We made 100 episodes. I send every guest, if they reach out, like I want to be on the show or with someone we like I need to send you our rules of the show.
Okay. Smart.
Rule number 1, no assholes. And again, I'm like, excuse me, I curse often. That's a firefighter in me. And I don't mean like, I'm kind of an a-hole, right? But
I wouldn't say that.
If you have demands like, well, I need these, we want to give you whatever food or whatever you want. If you're demanding, you got to ask me these 10, like if it's just over demanding. So rule number 1 is no assholes. Rule number 2, see rule number 1. I will send you these rules. Rule number 3 is the show must be one of 3 things: educational, entertaining, or fun. Preferably fun.
Yeah. No sales.
Rule number 4, they can sell their product all day.
Yeah.
Talk about what
Okay.
you're doing. Rule number 4 is the show's not about me, it's about you. So every guest I have on, I'm like, you should be talking at least 75% of the time. And then the last rule, which is the most important, when the fun stops, the show stops.
There you go.
If I don't enjoy this anymore and it becomes just miserable, and I almost hit that point last year until I got a couple of the texts that you mentioned. When the show is no longer fun, I'm shutting it down.
Dude, when people send you a text, or Charlie, I send you all the comments, now you're on YouTube checking them out. When you get someone that's like, hey, this hit at the right time, I really appreciate it. Or even the education stuff, when people are like, dude, you helped me get my PMI off. Thank you so much. And when you get something like that, and I shoot them over to Charlie too, and people are like, dude, I needed to hear that in the moment, man. That's the driving force. You're connecting, right? And even if it's just one person, you're connecting. Yeah, it's worth it. And I'll leave with this before we get into the healthy, not healthy, dead, good dad, bad dad commentary. A little spinoff.
That one's a hit, right?
That one's a hit. It's a banger, right? Yeah. So I'll say this. The way I view these shows, and if you've listened to the show for a couple of years, you know what I'm about to say. And if you're a new listener, I'm glad you get a chance to hear this. The way I view these shows, these are time capsules for my children.
I love this. You said this
when
before.
I'm no longer around, because I can write the world's longest journal. They may read it, right? And there may be so sizable stuff in there, but they may never get to it. But on a show that's going to live forever on YouTube or audio, they'll always have access to Dad. Always. And some of the fundamental things that we share in this show, they're fundamental for a reason. It's like they're in concrete because they're not going to change. And I want them to have access to that. And I want their children, my grandchildren, to have access to that.
I got chills right now.
So like these are time capsules that you're creating with sound advice, great guests, educational stuff that you really get a chance to put dead on a shelf, and when they want to pull it down, they got it.
Yep.
At their own leisure.
Oh,
and that's
I love that.
That's really cool. And Charlie and I, we've put
adding
this
a rule.
together.
I'm adding
Charlie
a
and I
rule.
have put this together because he says that about his daughter, and she'll always get a chance to be like, look at what my dad produced. Look at what he did, and look how he helped people, and all this stuff that's on there. And so that's one of our driving forces with this. This is why we do it. So when you talk about your big why, there's our big why, right? It's not to get sponsored and make hundreds of thousands of dollars.
By the way, y'all feel free to sponsor this show now. It's pretty awesome. I'm just saying.
What's your I appreciate
one more?
the shout out. But that's that's our big why. Is we're creating time capsules and timeless pieces that all of our friends and family for generations to come are going to have access to.
Do you know who my number 1 listener is? Has never missed an episode?
Who?
It's my mom.
That's awesome.
Katie Ross. Every week she calls.
That's awesome.
I shout out almost every episode. Love you, Mom.
Yeah, that's awesome. That is awesome. Very cool. All right, let's go ahead. Let's kick it off. Last part of this. If you remember last time Eric was on the show, he really caught me off guard with this. But healthy, not healthy. Good dad, bad dad. You answer the questions. You kick it off, and then I'll go.
Okay. So we on What the Health, we do a segment called Healthy or Not Healthy. Mm-hmm. So healthy or not healthy. The interest rate in the United States right now.
I'm going to say not healthy because it's preventing homeowners that want to buy right now are battling prices that are high, insurance prices that are high, everything we just talked about in the household income. We need to get those down temporarily to create household affordability. And there's a lot of locked up equity in homes that could be used to generate and stimulate the economy. And if that rate comes down, it'll be there.
Healthy or not healthy, getting clubhouse tickets to the players for the entire tournament.
It is absolutely fun, but not healthy. Recovery is rough.
I love the goat swag. I got my goat swag.
Yeah, there it is. It's
my bank account. Yeah, that's
a thing.
Good dad or bad dad?
Okay.
I met your son. I'm saying good dad. I don't even have to ask. I had the fortune to meet your son the other day. You're a hell of a dad.
Man, thank you.
The segment, good dad or bad dad. So good dad or bad dad, watching YouTube with your daughter versus making YouTube videos.
Oh, watching.
Good
watching versus making YouTube videos. Yes.
I mean, well, he was talking about making videos with his daughter. I think that's a great idea.
Yeah.
But so the good dad, bad dad we started doing too. You got any ideas?
Yeah, I got you. So good dad, bad dad, coaching your son in sports. But coaching your son in sports, starting your son, like, okay, let me back up. This is always a challenge. Like good dad, bad dad, being the head coach.
Good dad.
Okay. However, good dad, bad dad, battling other parents of other kids on that team because maybe your son's starting over their son.
I would say, again, I love these because it's loaded. Good dad. If my son does not deserve to be playing shortstop and I start him at shortstop, bad dad.
Correct.
Right? If I debate with another parent as the coach, like, hey, stay out of the dugout during the game. Good. Or there's a good dad, bad dad. But if I'm starting my kid when he shouldn't be starting, that's a bad dad.
Daddy ball, bad dad.
Yes.
Daddy ball.
Agreed.
So piece of advice, coached my son for years, and one of the co-coaches that I had is still at the ballpark, and I thought it was great. He said, I have a 24-hour rule. He said, if you want to talk to me about the game, about your son, 24 hours after the game is played. Give it 24 hours. And I will always talk to you about your son the minute you mention another child. We're done.
Good dad.
Good
dad.
coach. Good coach.
And
well,
good coach.
because he's a pro. He played pro.
Okay.
Like he gets it, right? But hearing that, I was like, what a great rule of thumb.
Yeah.
What a great rule of thumb to carry with you in any sport your child's involved in.
Healthy or not healthy, hurting yourself playing kickball with kids.
Yeah, it is not healthy because hurting yourself. I mean, playing with your kids.
That's good, dad.
Yeah,
but
good
injuring
dad,
yourself.
But injuring yourself's not healthy. Somewhere you got to draw a line.
Brutal.
Not good there. So, all right, here we go. You ready? Healthy, not healthy. Trump.
Physically or as a president?
We're always going to talk as a president.
Again, people. Godly, my wife and I butt heads about. I'm going to say healthy.
Okay.
I think personally, again, I take political affiliations out of it, which is impossible.
Right.
But I think in my industry specifically, I'm going to say healthy.
Okay.
And I'm going to get a lot of slack for that. I know.
Healthy, not healthy. Doge.
I'm also going to say healthy.
Okay, fair enough. All right. Healthy, not healthy. Current Federal Reserve Chairman Jerome Powell.
I'm going to say healthy.
Okay. Healthy, not healthy. The current unemployment rate in the United States.
That's not healthy.
Yeah. Well,
not healthy.
Okay. Is real, not real?
Is it accurate or not accurate?
Yeah, correct.
That might be the next segment.
That should
real
be
or not real,
right? Because so real or not real. And that's I always laugh about that because we debate that on the show all the time. It's like,
what's accurate, what's real?
Yeah, what's accurate, what's real. So it's tough.
That's a good segment. Real or not real?
Yeah, absolutely. There you go. There's another
just throw out
show.
random stats to see
random
people,
stats.
Yes, that's good.
See what you're talking about over here.
Yeah.
So, Eric, always great to have you on the show, man. Thanks for your time today. Really appreciate your insight on the insurance world as a whole. How to prepare for it, how to navigate it, things you can do to make it better. 212 benefits. Guys, check out that link at the end of our YouTube channel. I heard like 3 takeaways today. Number 1 was don't pay the bill first. Number 2 was
book. At least this book.
There's the
right
book.
Here.
Never pay the first bill. The second thing I heard was the offerings that your company will provide, no matter how many employees you have, up to 500. The third thing I heard was if you're an independent contractor, real estate agent specific, there's going to be a link in here that Eric has a company out of North Carolina that specifically helps the needs and wants that you may have right now in there. Take advantage of this. You know I love bringing guests on the show that bring value. today was exceptional value. Eric, thanks for being on the show. We really
pleasure.
appreciate it. Guys, if you like what you're hearing, please share this podcast, 5-star review it, leave us a quote or some sort of comment on Apple or Spotify. Hit us up on our YouTube channel. You heard me plug that. I love the comments. Love the feedbacks. We try to respond to all the comments on there. Sometimes you guys overwhelm us, but we try to get to all of them. We definitely value it. Till the next episode, we'll see you at What's Your One More.
I got one more shot, I'm gonna make it. One more chance, I'm gonna take it. I meant it when I said it, now it's time for me to do it. I got one life to live, so I put my all into it, yeah.